video will walk you through both the fourth and the fifth requirement of this problem, which brings us all the way through all 5 steps of process costing. What you'll notice, and this should be familiar hopefully from class, is we've got this little schedule here, and this schedule will make sure that we take the costs, the 641, and we get them moved into the right areas of the balance sheet and the income statement, and that they're all accounted for. That's a very, very, very critical part of process costing, is to get things correctly accounted for. Remember, we're using the FIFO method. The FIFO method is much different from the weighted average method, and the main difference is that we didn't take all the costs and aggregate them together. We segregated this beginning work in process from the costs added in the current period. And the reason we did that was to give us a benchmark for the current month on how much it's costing us to produce the units, or the pounds in this mixing department. So, as I'm counting for and reconciling all the costs now, given process costing, I have to add back in this $60,000, because these are the costs that existed on the balance sheet at the beginning of February, and they need to go somewhere. They're actually completed now. These costs are completed. These were getting WIP. They move their way through this process, and they need to move out to the next department. All 60,000, so we need to account for them, because this 66 cents and the $1.03 didn't account for that beginning work in process. Okay, so that's how I got 60,000. Next, we need to add to that WIP, right? The beginning WIP had 100,000 units, pounds, sitting there, and it took more than $60,000 to complete it. This was what there was from the prior period. Now we added some costs to completely finish those units. And the amount we added with respect to materials, so this would be the materials column, is 0, right? So because the problem told us that all the materials had been added to these 100,000 units in a prior period, so there's no costs relative to the material that were added in the month of February. However, that is not true for the conversion costs. We had a 60,000 equivalent unit for the beginning work in process, and those were completed in the month of February. So we added costs, we added labor, we added overhead at the rate of this 103. So we take this $1.03 times the equivalent unit to get this 61,066. Okay, so these two added together, the material and the conversion costs, and now I add those together. This is the total cost from the beginning inventory that's now going to move out of work in process. Again, we're using a FIFO method, so this cost is different because of the 60. Okay, and now we also completed these 270,000 units. It started and completed these 270,000 units in the month of February. So that means relative to material costs, we have the 270 times the 66 cents per unit, per pound. That's my total costs. And for the conversion costs, it's 270 times $1.03. So the total units cost of the units completed and transferred out is $455,531. Now, if I just add up all of these, the beginning work in process and the units completed and transferred out, you'll notice this 577, 197.92 is the total cost accounted for. Our goal here is to get the total cost we've described in step 3, 641. They all need to be accounted for, and this is the basis from which we will make our journal entries at the end of the month to move the inventory around. And right now you can see we're short. We don't have the right amount counted for, so we know we're missing something. We're missing the ending work in process costs. And those costs are the 50,000 units, equivalent units, that we've completed in the month of February, times the per unit material cost, and the 30,000 units, equivalent units, in conversion costs times the $1.03. What you'll notice is I add both of those together, and now if I take this 577 and I add to it the work in process, it works out perfectly. The total costs to account for match the costs we've accounted for. And what we would then expect on the balance sheet is my work in process for this mixing department only has $63,802. The remaining has moved out to the next department or to finished goods, depending on, they don't really, well, they do tell us there are 2 departments in this process. So this would move on to the work in process in the next department. So that's it. Those are the last 2 requirements for the problem.